Hi, my name is Chris Buntic. I'm President and CEO of Ascendant Resources, here today to discuss with you our operational and financial results for Q2 of 2019. From an operational perspective, we had a very good quarter and produced 24.6 million pounds of zinc equivalent metal at an average head grade of 6.7% zinc equivalent. This is the best performance we've had since the beginning of our tenure at El Mochito in the past 10 quarters. As we began the year, we had expected to see lower production in the first half of the year, followed by a ramp up in the third and fourth quarter on a metal basis. And right now we find ourselves ahead of that expectation, with the ramp up in Q3 and Q4 still expected to happen. We're benefiting right now from the higher production and higher grades in Q3, and that's expected to continue and accelerate into Q4, such that we'll average about $1.10 all-in sustaining costs on a zinc equivalent basis at the mine, and $1.15 on a consolidated basis as we exit the year. It's been a challenging quarter as well as a year with respect to the commodity prices. Our expected increase in both throughput and grade in the second half of this year should help us to mitigate some of these pressures in the short term, which is certainly being felt by both us and our peers. Contained metal production during the second quarter was 24.6 million zinc equivalent pounds. The average head grade was 6.7% zinc equivalent. Tons milled was 195,706. Revenue during the second quarter of 2019 was $18 million, with adjusted EBITDA of $0.5 million. Net loss in the quarter was $4.18 million, or a loss per share of 5 cents. Direct operating costs were $81.79 per ton, and cash operating costs were 76 cents per payable pound zinc sold. All-in sustaining costs were $1.43 per payable pound of zinc equivalent sold. Some of the challenges we faced this quarter were the full effect of the increased treatment and refining charges year over year that we are facing right now, as well as some slight power increases and wage increases. Now, we've done a good job of trying to offset those with cost reductions at the mine, as you can see in our cash operating cost of 76 cents per payable pound, which has been relatively consistent over the past several quarters. In the context of the current market, we're paying particularly close attention to the management of our working capital position. As we look to fund the expansion and optimization program at El Mochito, we are advancing several potential financing transactions, which I hope to be able to provide further updates on shortly. In the second quarter, we announced the beginning of our exploration program at the Lagoa Salgada project in Portugal. In late July, we announced the results of 15 holes from this current drilling program, 14 of which had hit massive sulfides across significant intervals. We're expecting additional drilling results shortly, and all of these should be incorporated into an updated mineral resource estimate in the third quarter of this year. The results of the exploration program to date have been very successful and very encouraging, and we're expecting to take that mineral resource estimate through to a preliminary economic assessment delivered by the fourth quarter of this year. Overall, we've had a very good second quarter with our 10th consecutive production increase at El Mochito since taking over the operation. With the expected increase in throughput and grade at El Mochito and the milestones to come at Lagoa Salgada, we look forward to a strong second half of this year, and we look forward to updating you on our progress at the end of Q3.